Why didn't my real estate agent know? At DST Investments, a service provided by Fiduciary Capital Management, LLC, we hear that question often when consulting on Delaware Statutory Trust, or DSTs, investments for a 1031 exchange. We heard this from a client in Naples, Florida recently with several investment properties who no longer had the time or energy to manage those properties, but didn't want to deal with property management companies and did not want to lose 25% in taxes right up front when selling her investment properties. So they decided to choose to do a 1031 into several Delaware Statutory Trusts, or commonly known as DSTs. We are Fiduciary Capital Management, LLC, registered investment advisor. We provide real estate investment advisory consulting services on Section 1031 exchanges and Delaware Statutory Trusts, which are most commonly known as DSTs. Our firm is regulated by the SEC and as advisors in the DST consulting area serve as fiduciaries to our clients, which also means that we don't work for commissions but represent a client's interests foremost. Typically, the best real estate agents are hardworking, honest, self-motivated problem solvers who can listen and adapt to their clients' needs. In order to do this, it requires knowledge, experience, and a few extra tools in their back pocket. Real estate agents who truly want to serve their clients and help generate listings should know about Delaware Statutory Trust, DSTs. If you're a property owner of an investment property, this may be an excellent option for solving the replacement concerns of a Section 1031 tax-deferred exchange. From our experience, we know that knowledge about DSTs can help real estate agents generate listings and better serve their clients, especially clients from the baby boomer generation who are in or entering retirement. What is a DST? Let's start with the basics. Delaware Statutory Trusts are generally offered by institutional sponsors and contain quality properties or portfolios of properties. Investors can perform a 1031 tax-deferred exchange and move into a DST. For over 20 years, the IRS has indicated that DSTs may be used as replacement properties and can qualify for deferring capital gains taxes. Despite the name, Delaware Statutory Trust investments aren't just for Delaware. They can be offered throughout the United States. They can include a wide range of property types, including commercial and retail buildings, industrial properties, medical offices, multifamily apartment complexes, single-tenant rental properties, and much, much more. DSTs can be bought as cash investments or used for 1031 replacement property. A DST is a separate legal entity formed as a trust under Delaware law that, if properly structured, will be classified as a grantor trust for federal income tax purposes. And as a result, the purchaser of a beneficial interest in the trust will acquire an undivided interest in the assets held by the DST. Delaware Statutory Trusts are structured so that each beneficiary or investor owns a beneficial interest in the trust. The managing trustee of the DST is either the sponsor or an affiliate of the sponsor. The DST holds 100% of the interest in the property. Tax reporting for a DST is done typically on a Schedule E, utilizing property operating information provided by the sponsor. Many seasoned investors own highly appreciated real estate assets and income properties. As these real estate investors enter retirement, many would prefer to no longer deal with hassles of property management, including maintenance problems, tenant disputes, rent checks, vacancies, and leases. Hiring a property management company can help with many of the day-to-day tasks, but it still requires a lot of involvement from the owner. If you're a real estate agent with any clients in this type of situation, you may want to discuss with them the potential benefits and drawbacks of a Delaware Statutory Trust using a 1031 exchange. If your client decides to move forward with a DST, You can help them sell their current investment property, thus creating a listing, and then they can reinvest the proceeds into a Delaware Statutory Trust through a tax-deferred 1031 exchange. In some cases, your potential sellers may resist listing a property because of the challenge of finding another property that provides less management, attention, time, and stress. We've seen many times that investors just run out of time in locating potential replacement properties. In addition, the other requirement of the 1031 clearly states that the debt must be replaced. Potential sellers may not want to incur any recourse debt. DSTs are packaged with non-recourse loans when there is debt involved. Ownership in a DST offers the typical benefits and risk an investor would receive as a single large-scale investment property owner, but without the responsibility of managing the properties. DST properties are managed by professional investment real estate asset managers and property managers. A DST may provide some of your clients with a worthwhile opportunity to move their investment into a more passive investment portfolio with added benefits. The potential seller may also benefit from the non-recourse debt featured provided by the DST structure. For real estate agents, this also creates a real estate listing if your client decides to sell their current investment property and invest in a DST. The alternative may be the potential client simply keeps their property, does not sell, and then there is no listing. In addition to tax deferral benefits through 1031 exchanges, DSTs can also provide the following benefits. Low minimum investments. Delaware Statutory Trusts typically have relatively low minimum investments starting around $100,000. A low minimum investment provides smaller investors with an opportunity to own a portion of a large professionally managed commercial property along with other investors, not as a limited partner, but as an individual owner within the trust. As part of a DST, each owner-investor receives their percentage share of regular cash flow income, tax benefits, and potential appreciation, if any, on the entire property. Diverse portfolios of properties. Another reason your clients may want to consider a DST is that the cash proceeds from the sale of a single investment property can be exchanged into multiple DSTs. This allows a diverse portfolio of properties which can be diversified by a variety of fund sponsors, property types, or geographic location. This diversification can help to reduce the risk associated with concentrated assets. Estate planning. DSTs may also be effective for estate planning, since they can be easily inherited by beneficiaries who will avoid paying taxes altogether as they receive the assets on a stepped-up tax basis. There's a lot more to know about DSTs. That is why it may be best to speak with a registered investment advisor who handles DSTs on a regular basis, not a real estate broker. Having a professional advisor assist you throughout the process is important. Understanding just 12 fundamental elements of DSTs and 1031 exchanges will make you more informed to know if a 1031 strategy will fit into your overall tax and real estate plans. We can assist in balancing all aspects of the exchange and acquisition. Having a fiduciary in your corner helps guide you through the transaction. Fiduciary Capital Management, LLC is a registered investment advisor who specializes in consulting in the area of 1031, 1033, and DSTs. DST offerings are structured and offered as securities under the Securities Act of 1933, which requires the investor to be provided with a private placement memorandum, or PPM. The PPM discloses various risks, fees, and expenses associated with the 1031 exchange and a DST investment offering. The PPM will also outline that potential investors must be accredited, which means they must have a net worth of $1 million or more, not including their primary residence, or have had income over the past 2 years of $200,000 for individual or $300,000 for a couple. Business trusts and other entities may also qualify as accredited. Accordingly, the investors can now enjoy the best of both worlds, the disclosures of a security and the tax advantages of real estate. This video is not a complete explanation of all 1031 scenarios and does not contain all the details of any DST investment. As described previously, those details would have been outlined in a private placement memorandum. Meanwhile, please let us know how we can assist you. If you're a real estate agent and you want to know if a DST 1031 exchange is right for your client, or if you just want to learn more about how DSTs may be a helpful tool to create listings, please contact us or send us an email. For more information on current DST opportunities, or if you are within the 1031 identification process, please contact us as soon as possible to review your situation and financial objectives. Thank you for listening.